watching the latest news from financialmirror.tv. Mergers and acquisitions will continue to be the flavour of the week as the US credit crisis continues to spread across the Atlantic, hitting European companies, primarily banks. Investors around the world hung on every twist and turn in Washington as Congress continues to argue the merits of the $700 billion bailout plan, while Benelux governments moved to part-nationalise Belgian-Dutch group Fortis. ING will buy ABN assets, Britain will nationalise mortgage lender Bradford & Bingley and sell its branches to Spain's Santander, while Citigroup and Wells Fargo are bidding for Wachovia. Fortis is the first major Eurozone bank to buckle under the financial turmoil triggered in August last year by US mortgage defaults. The Fortis rescue came after ECB President Jean-Claude Trichet met government officials over the fate of one of Europe's top 20 banks. The governments of Belgium, the Netherlands and Luxembourg agreed to inject €11.2 billion, or $16.4 billion, into the banking and insurance company. Fortis will sell the parts of Dutch bank ABN AMRO it bought last year to Dutch rival ING. Shares in French bank Dexia tumbled more than 20% on reports that it might launch an emergency capital increase. In Germany, Hypo Real Estate struck a last-minute deal with a consortium of banks to resolve a financing squeeze, and the German government will provide the bulk of a credit guarantee for €35 billion. In London, the government's nationalising troubled Bradford & Bingley, the second British bank to fall under its wing since the crisis began last year with the collapse and multi-billion-pound rescue of Northern Rock. After weekend talks failed to find an outright buyer for Britain's ninth biggest mortgage lender, the Treasury said it would take over B&B's £50 billion mortgage portfolio and sell its deposits and branches to Spanish bank Santander for £400 million. The opposition Conservatives said this was another example of government failure. But opinion polls have shown a bounce for Prime Minister Gordon Brown, with a Sunday Telegraph poll saying he was the most trusted to run the economy after the government-brokered rescue of HBOS and laws curbing short selling. B&B, with its heavy exposure to Britain's slumping housing market, could no longer meet its funding obligations. The Financial Services Compensation Scheme, which is funded by the banks, had to pay out £14 billion to enable B&B's retail deposits to transfer to Abbey Santander. Net mortgage lending collapsed in Britain in August and approvals for new home loans fell to the lowest in recent years, according to the Bank of England. Net mortgage lending was a mere 2% of the level seen in August 2007, down to £143 million from £9 billion. Mortgage approvals, a key forward-looking indicator of housing demand, fell to 32,000 last month from 33,000 in July. The figures highlight the extent to which the credit crunch has sucked the lifeblood out of Britain's housing market, with banks reining in lending as house prices fall faster than they did in the recession of the early 1990s. In other bad news for the sector, property consultants HomeTrack said that British house prices fell for the 12th straight month in September to 6% lower than they were a year ago, suggesting that the government's decision to raise the threshold for stamp duty has done little to support the housing market. Thomas Cook, Europe's second biggest travel firm after TUI Travel, has pulled out of talks over a potential merger of the airline Condor with TUI Fly and Lufthansa's German wings. The group also said trading in the summer 2008 season had been strong and that winter 2008 to 2009 would be particularly strong in the UK. Markets also welcomed the decision by the German parent company Arcandor not to sell its stake in Thomas Cook to secure financing, and that the group will launch a capital increase instead for €41 million. Arcandor holds around 52% of Thomas Cook, the group's only profitable unit, which generates about 60% of group sales. Arcandor said it had made no decision on Karstadt, the department and sports stores unit that's seen losses widen due to sluggish consumer spending. And finally, a security hole in Adobe's software used to distribute movies and TV shows over the internet is giving users free access to record and copy from Amazon.com video streaming service. The problem exposes online video content to the rampant piracy that plagued the music industry during the Napster era and is undermining efforts by retailers, movie studios and television networks to cash in on a huge web audience. The flaw rests in Adobe's Flash video servers that are connected to the company's players installed in nearly all of the world's web-connected computers. An Amazon spokesman said content on the company's video-on-demand service, which offers as many as 40,000 movies and TV shows on its website, cannot be pirated using video stream catching software. However, in tests by Reuters, at least one program to record online video, the Replay Media Gatherer from Appliant Technologies, recorded movies from Amazon and other sites that use Adobe's encryption technology together with its video player verification. Thank you for watching FinancialMirror.tv and have a turbulence-free week if you can.